Welcome to Accounting High.
Check out the cash flow show. We discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the cash flow show. The cash flow show. Listen and learn. We'll show you how to pay yourself on what your business earns. With Nikole and OKR.
Hey, yo, what's up, Nix?
Hey, Scotty. Good to see you as always.
Welcome back, students. Today, we're starting a 3-part series on measuring your marketing dollars. Tell me, Nikole, what is the inspiration for this topic?
It's funny, because we had a couple 2 parts on marketing, and then I created this marketing calculator and a YouTube video to go with it. And then following creating that, just randomly, I've had like 3 clients reach out to ask us if we can help them understand their return on marketing spend. And they're wanting to know things about lifetime value of a customer acquisition cost. And so for some reason, it just keeps popping up everywhere. So I thought it would be fun to go through each of these calculations. And then also I have this calculator available. So if anybody wants to go apply the concepts in their own business or with a client after they listen to it, they can do that as well.
Dope. All right. So lots of inspiration going into this and this series. I'm real excited because I've got a lot to learn about this. I'm not very experienced in understanding these measuring your marketing dollars because I don't really have too many marketing dollars at my practice. I haven't spent money on marketing, but I'm going to need to. So this is going to be very valuable for me.
Yeah, and you're very lucky in that you don't have to spend too much on marketing. You do spend some on sales in terms of you have team members who are managing sales. So when I think about these calculations, I'm also considering sales costs, marketing costs, and then also time with the value of either, a lot of times owners are doing a lot of the sales and business development. So we need to consider their time, or you may have situations where you have other team members who are doing webinars or any business development. So we also have to consider their time in addition to other more tangible marketing costs, right? Like spending money on advertising, spending money on a marketing agency. So we're going to look at all of that holistically because these types of expenses aren't like other expenses on your profit and loss statement. These are expenses, well, they're actually more of an investment in future revenue. So we have to think about them differently than we do other expenses on our profit and loss statement.
Yeah. Well, and it's also, you made a lot of good points there. So marketing spend isn't just spending money on advertising. It's all of the other things. And your sales is also part of this marketing spend or what you're spending on sales in general. It looks like again, like I said, I have a lot to learn on how we're doing all of this. Today, we're going to talk about the LTV or customer lifetime value. Is that right? And that's going to be part 1 of our 3-part series. What is a customer worth for you? Then we can go backwards from that to see if our customers are worth, $50,000, $100,000, then it might be worth it to spend a little bit of money on this investment of marketing and to calculate that. So let's start talking about more of that LTV.
Yeah, and I think like lifetime value is important too, because like with our bigger clients, right, for us in a professional service environment, we understand that if we have a big potential opportunity, we might be willing to spend 2, 3, 4 sales calls warming up that person to get them to buy from us versus if we're a very low cost service provider and we're charging $500 a month, we cannot afford to have these long drawn out sales process. So it helps you understand how much you can actually spend in order to acquire that customer and how much you should be targeting in terms of return on your marketing dollars. Also helps us understand, like, if we're not getting a good ROI, what we can do to tweak that, whether that means improving the lifetime value of a customer through retention strategies or just overall increasing the value of a customer by adding on additional services. And then that'll, again, help us inform how much we should be spending on marketing.
Oh, okay, cool. So let's get a little bit more granular. Let's get a little bit more tactical here. This is going to be a tactical episode. So let's talk about, how do we calculate this lifetime value, LTV? How do we start?
Yeah, so the calculation's pretty basic and people do it a couple different ways. So I'll tell you how I think of it. What we want to do is we want to take the average value of a customer. So for example, let's say we have $1 million business and we have recurring revenue. We have 27 clients on average per month. So what we would do is we would take that $1 million divided by 12, which is around $83,000 a month, divide that by 27 clients, and that's an average of $3,000 per month. And a lot of people know this. Like, you ask other people, like, what's your average dollar value per month for client? Most people have an idea of what this is in general. And one thing I would say is, like, don't overcomplicate this. If you don't have the data going backwards, just do an estimate, because that'll get you far enough.
Yeah. A lot of people get bogged down by the details and they can't even get to the calculation part.
So once we have the average revenue per customer, and in this example, I'm assuming that you have a recurring revenue business. Now, if you have a different type of business model where, let's say, you just sell a one-time project, then we would use that one-time project average. So if you're a construction company or something and your average project is $1 million, then use that $1 million. Going back to my example of an average of $3,000 per month, the next thing we need to do, because as soon as we get that revenue, we're immediately spending money to service that revenue. So if we go back to our 50-30-20 rule, generally we want no more than 50% of our revenue to be spent on directly servicing that client. Right off the bat, we've lost 50% in terms of value of that customer. And so what I like to do is I multiply the 3,000 by our direct cost, 50%. And so the actual value of each customer is $1,500.
Okay. So you're just taking off half to cover overhead for that.
Not overhead, our direct costs only. We're not including overhead in this calculation, because overheads it doesn't directly impact.
If we counted how many times I said the wrong word for overhead on this show, it's a lot. Every time I'm talking about COGS, I say overhead. I do it wrong every time. Sorry. It's like mixing up debits and credits.
Yeah. So some people make that mistake as they try to, a couple of mistakes people make. They only use the gross revenue, or they try to take the full net profitability of a single customer. And the best way to do it is actually just use the gross profit of a single customer. So in this case, we've cut it in half, 1,500. And then let's assume that a client stays for 3 years with us. So in that case, that's 36 months. So we multiply our 1,500 by 36. So the lifetime value of a customer is $54,000.
All right. So that's our LTV for this customer that's paying us. And one thing I wanted to point out is you're saying that the average client stays for 3 years. Is that just in this example? You want to think of how long your clients stay with you.
That's right. So ideally, some of this just might be based on gut. If you really want to run the numbers, you can go back and figure out, look at the last X amount of years and figure out on average how long customers stay. Another way to back into this, if you are a newer business and you just don't have that data, is you can take 1 and divide it by your churn rate.
Take 1 what?
So just the number 1 divided by your churn rate. So if you have a 20% churn rate on an annual basis, if you take 1 divided by 20, that means that your average lifetime it equals 5. So it's basically like 5 years can estimate that your customers stay based on churn rate. It's a way of backing into lifespan.
Yeah. So to get your churn rate, how do you calculate that number?
That's a good question.
So we're assuming that people know how to get their churn rate. They may not even know that part of it too, but that, so.
Yeah, that's a whole nother calculation. So, but that's basically the number of customers lost during a period divided by the number of customers at the start of a period.
Okay. Yeah. We're averaging a lot of this anyway. So we're using historical numbers to kind of determine what these rates are. So that's good. So we're at the point now where we figured out, and in this example that we're using, about 50,000, 54,000 would be our customer lifetime value.
Which seems pretty good, but also depends on how much we're spending to acquire those customers.
Yeah. So we want this number to be higher. We're saying that let's say that number is reasonable, but you want to get that better. Here are some of the things that you can do to increase the value of one of your lifetime customers. One thing to do is reduce churn, right? If we're using churn to determine that value, then we could reduce churn, meaning we don't want customers to leave. So how do we keep more customers longer?
Could mean investing in client experience, right? Building loyalty programs. So you want to increase that lifespan and reduce churn. Exactly. That's one lever we have in order to increase LTV.
So how do you increase client experience, or what are some ways that you can do that?
Speaking from our industry, right? It's that customer service component. If our clients are happy, they're going to stick around. So investing in either, it could be a portion of somebody's job, or it could be that you end up hiring a customer success person, right? So making sure that you're investing in creating a good client experience, checking in with customers, identifying opportunities to potentially upsell or cross-sell to them, and then also making sure you're getting feedback and adding on more services or adding on more, building loyalty, basically.
So it starts with paying attention to the customer. So first and foremost, you should be doing more of that, communicating better with them, talking to them more, having increased amount of touch points with the customer so you can ensure better satisfaction.
Yeah, and in general, we all know that it's easier, it's typically less expensive to keep a customer than it is to acquire a new customer.
Yes, as we are discussing here. And this is why we want to measure and maximize our marketing dollars. So we can first have our increased value, a longer lifetime value of the customer. So then every customer that you do take on, they're worth more anyway, too, if you can keep your customers longer. All of this seems like common sense, but it does take an effort to be able to do that, because it's most business owners tend to focus on the other things that are, maybe not working, and not focusing as much on their customers and the things that are working and doing them better.
Yeah, well, I see that. We see it all the time, right? Where people pump a bunch of money into marketing and sales and they're getting new customers, but then those customers are onboarding and then just falling off because they're not investing anything in customer experience. And so in that case, it may make sense to reallocate our dollars, and instead of focusing so much on new client revenue, spend some of that money on client experience.
What are some other things to increase this LTV?
Another lever we have is to increase purchase frequency. In this example, we're talking about a recurring revenue type model, but it's assuming that you didn't have a recurring model and you're like an e-commerce company or something, right? What are ways that we can get that customer not just to be a one-time customer where they're buying one piece or, like let's say we sell clothes or something, right? And so they see a shirt on Instagram and they're like, cool. So they buy that shirt. How do we make sure that that customer then comes back to our store and buys from us again? So in that case, we may want to invest in email marketing or some way that we've got their information already. How can we mail them flyers? How can we do email marketing? How can we do more targeted marketing to that same customer so that once we have them in the pipeline, we're keeping their attention and having them come back and buy more from us?
Staying in front of the customer. Yeah. So making sure that there are more touch points. I like that. What about things you can do for, like you mentioned, loyalty programs? I'm interested in ways to utilize that, or what are some examples that you could think of there?
Yeah, I mean, you think about like Marriott or airline memberships or credit cards, right? Basically, they're getting you to come back. You have lots of other options when you're booking a flight, lots of different airlines you can fly, but a lot of people will have a loyalty program with one, and then they'll only fly that one airline. And so by having that loyalty program, they may be losing some money by giving them away free miles, but they're increasing the lifetime value of those customers.
So for like restaurants too, if you have like one of those maybe punch card or things, if you've gone a certain number of times, you get a free meal or free something. show increased loyalty. Obviously, you want people to choose you and come back to you if you're not recurring revenue.
Yeah. And once you get a customer that's in the door, we want to make sure that we, again, give them an incentive to come back, because those are again, it's way easier to get that customer to come back than try to get a new customer off the street.
Awesome. Yeah. What are some other things to increase the value?
Another way would be to increase the average purchase value. So I don't know if you've ever checked out of like an e-commerce store and you go on there to buy one thing, and they're like, each stage you try to check out, they're like, what about this? Other customers also like this. And they keep trying to get you to add more to your cart. Those are some really good strategies to get the value of that individual purchase up. In a professional service business, then one thing that we could do is go through like our portfolio of clients and then try to identify other services, basically cross-sell services with our existing portfolio to increase the value of each customer that way.
Yeah, I love that example too, because sometimes you know, if you've had a good experience so far, why not add a couple other things to the cart, especially, or in any other case. You've done this at your firm too, where you've made it easy for them to add services during the sales process. I know the tool that you use for your proposals has a way to add on other services as you're going through to finalize the proposal. Is that right?
Yeah. Well, it's funny because lately we've been looking at all of our hours, and we're like over hours of every single client. And part of it was because we had a certain role that's a certain team member whose job was to keep track of scope and then go out and talk to clients and rescope them or upsell them as needed. Lost that team member, and nobody's been doing that. And so now we're about to do a training on Thursday to try to get the team to identify when clients are asking for something additional. It's not about saying, no, we can't do that, that's out of scope. It's about saying, yes, we can do that for you, or yes, we can do that for you. Let me get a price for you. And like trying to get the team to identify when a client might need additional services, because as the sales team or as the owner, we don't have no idea what's happening with the client at a ground level like the team members do. So like, how do you set up systems so that your team can identify cross-sell opportunities, or set up systems, like I mentioned in that e-commerce example, like making sure you're using the right technology to automate those upsell opportunities.
Oh, well, students, I hope you have learned something today in learning what the lifetime value of a customer is. Next week on part 2, we will be talking about understanding client acquisition cost, customer acquisition cost, CAC, another acronym for you. Nikole, what is our call to action today? Where's everybody going to go?
Yeah, if you want to go practice this, I have a marketing ROI calculator I've created. You can go to the LTV calculation tab and see what those numbers are that we just went through and practice that. So we will link the URL for that. It's resources.momentumaccounting.com/marketing-calculator. And again, we'll link that in the notes here.
Dope. All right. Class dismissed. Peace out, homies.
Yeah. So you're drowning in cash flow issues. You run a business, but feel like it's running you. Customers won't pay, but you got bills due. It appears you won't have enough for payroll coming up soon. It seems like you running nowhere fast. You work hard, but never able to withdraw cash from the business. You get more customers, hire more employees, but still take home hardly anything. You feel like you're on a hamster wheel, frustrated cause the battle's always uphill. Even though you got a bookkeeper on your team, they send you reports, but you don't really know what they mean. Your CPA doesn't understand a thing about your business, at least that's how it seems. But if you want to get above water and grow, check out the Cash Flow Show. This is the Cash Flow Show, where we help the small business gain momentum and become profitable. This is the Cash Flow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cash Flow Show. topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cash Flow Show. The Cash Flow Show, where we help the small business gain momentum and become profitable. This is the Cash Flow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cash Flow Show. Our advice will take you far. Cash Flow Show. Tune in with Nikole and OKR.